Hi and welcome to the Market Alert for Thursday the 13th of January 2022. So US consumer prices soar at fastest pace in 39 years. Real wages tumble for the ninth straight month. The last time inflation was this high, ET was phoning home. So we're going right back to around 1980-81 then for these sort of numbers, which is interesting. Very interesting indeed, because if I remember, Volcker was the Fed chair then, and rates ended up being about 12%. Not that the 12% is going to happen, that's for sure. But interesting to see that we've got prices soaring at that fastest rate for 39 years. So there we go. And the figures were actually, if you have a look here, not as high as I thought they would have been. I mean, they're only just slightly higher than the forecast and certainly lower than the previous. But I would have thought they would have been a lot higher, given that we were, these are December's figures, as it were, but they're not. CPI was up slightly, certainly on the previous. So maybe that's what it is, because it's the core as opposed to just the CPI month on month there. So in the Dow, you can see in the daily chart, not much of reaction at all. Non-event, 62% retracement in the daily is where the market stopped. A bit of weakness coming in there now. Should put a bit more weakness on the market, to be honest with you, because the threat of rates being increased continues. But in the 30-minute chart, you'll see there, market moved up and then it sold off, and then it tried to bounce back and then traded sideways to 78%, and then 78% back to the upside and back to 89%, and then it's been sideways. So a real non-event. Maybe the market was expecting it to be less, I don't know, but at the moment it's certainly not bullish, that's for sure. It may attempt a rally to the upside, but in all honesty, that now puts further pressure on Powell to raise rates, as he's made his mark about it and his comments about it. So let's have a look at the DAX. Similar picture, market trading up to 62%, very narrow range for yesterday. Well, it appears to be here, but it's not, as you'll see in just a moment. Price is sideways, holding above the 5-bar moving average at the moment. I'd be inclined to just draw in a few fibs on the downside, just in case the market moves to the downside once the futures and cash market kick in the next half an hour, and so I've got some targets on the downside there. Certainly resistance at 62 that the market couldn't take out yesterday. In the 30-minute DAX, you'll see what I mean. Very messy. The market moving sharply lower, 100 points in the kickoff, then finding support. And again, you've got this in the bigger time frame. That's the news there coming out. And then the Dow moving higher and then coming back. But you can see that same pattern alternating between fib retracements in quite a big range, actually. That's not a small range. And then it just starts to narrow as the night goes on, of course, which you would expect it to do so. Market needs to get above the DP if it's to trade higher and stay above yesterday's close. And the low, keep an eye on this as well, because if you get a shakeout down to this, it's going to be very important. If it doesn't hold and you get a bounce, then you're likely to see the market move to the downside there. In the 5-minute chart yesterday, I'll just show you what happened there. It was a beautiful trade, particularly the one on the way back. We started off with a sell-off to the downside. We became oversold. We ended up with divergence. We had the two crossovers. We had the demand coming into the market, which you can see there, two lots of demand. And then prices trading sideways, which is what you want to see once you've got that support. And then we break back above the 5-bar moving average and trade back up 70 odd points there before once again the market becomes oversold, which you'll see there, with divergence inside of this activity here. And at the BRN, and we've got supply in the market as well. So we've got the traders selling in as the market heads up to this point, and then we switch and the market makes its way back to the downside. Bit of a bounce there, and then back to the downside once more. Then we had the news, which you can see there, CPI numbers, and the market does a correction before moving back up and doing a double top A bit messy and choppy for certain because of the 200 MA and the previous days. Which one would that fib be? I don't know which fib that is. It's the previous day's high. So yeah, that's why then it's messy, because trying to hold the market above the previous day high is obviously a bit of a challenge with the pressure on the downside at the moment. And then the market trading up to the BRN before it comes back once more, as it's oversold once more as well, with divergence and coming back 78% and then turning red, and down we go. Same pattern all the way through. So in the 2 minute with the old signals, we had a potential buy to the upside. This failed at the 200 MA. Market reversed off this, so that was a 16-point loss. There was a 47-point pickup on the downside as the market closed back at the 5-bar moving average there. You've got your demand inside of here as well, as you did in the 5-bar moving average. We then had another buy to the upside, this one resulting in a 15-point profit on this one, as the market came back more or less to the scalp. And then in the afternoon session, a bit volatile, we kicked off with another losing trade of 15 points, and then we moved to the upside again as the market came back with a 13-point, because it came back to the more or less to the scalp level when it closed below the 5-bar moving average. Then we had a 19-point on this one, again as it bounced off the previous day's high. And then this one actually resulted in a loss because of the speed that it came back through the 5-bar moving average there, resulting in a 16-point loss. But overall 47 points for the day on that one, which is a bit disappointing really, because there was the equivalent in losses. Whereas with the new strategy, as I've just shown you in the 5-minute chart, it's a lot easier to identify where you're going to get a lot more on the in the trade, and with less risk as well. So at some point I'll be writing automatic signals in for these patterns that I've been showing you over the last couple of weeks. Let's move on to the metals, and surprise, silver has been allowed to move up yesterday. I'm very surprised by this, because I thought the dollar would have moved higher on the basis that the Fed is going to have to increase rates. That's generally bullish for the currency, but not on this occasion. But the silver market allowed to get to 89, looking a bit weakish at the moment though at this level. So I was drawing some retracement here just to see where the market will come back to. I'm just going to add in the 38 and 50 in there at the moment, because it's quite a distance away. So let's just add those in. So 22.72 is the area. So 22.50 from a psychological area, BRN, is what I'd be looking for then. But if it's going to break, it needs to take out this 89% retracement, which was drawn in from here to here before we got the corrective move. We've still got potential to move to the upside, and you get, as I've said before, nice moves to the upside in the stochastic. So it could be a bit of a breather overnight, which we're just seeing at the moment. Market having a bit of a pullback there. But yesterday you can see the market's reaction. We were oversold. We had divergence with demand crossover in the stochastics at the DP level, and we had the volume there as well, where the outside money was in the market, and prices then moving to the upside. Gold, similar picture, stuck at 89 at the moment, and the dollar yesterday selling off, which is likely to see a bounce today, putting pressure on silver. So from here down to here, and again I'm just going to add in, I'll get rid of this one because we know the market stopped at 89 there. So let me just add in that 38 and 50 there as well. So from the line that's automatically drawn, I know where to draw the fibs from because it highlights them automatically, and these are the areas you want to watch. 38 ties in with the 5-bar moving average and the 50 EMA as well, which is a really interesting area of potential resistance. But a move back up to that sort of level in the daily chart will have an impact on silver, moving it lower. So it'll be interesting to see how that pans out. I'm also added in Brent Crude Oil now as well, because as the inflation continues, you can see we've had pretty much a big sell-off in crude oil. We went down from $84 down to $64. We had a classic retracement there, and then we've been moving to the upside. We're at about 89%, aren't we? We can see that. If I just put that back in and then go to the highest point, which is over here because it's shown automatically, down to here, and there you go, we're at 89% retracement in crude oil, so need a bit of a breather there to pull back. But if we look at this in the weekly chart, you can see it's a lot cleaner, a lot clearer, and down to here you'll see that we're at that 89 as well. Now, why am I showing you this? Quite simple. Crude oil is a fundamental driver of inflation, and it's good to know that where you are, if you can see the price of crude oil, you'll know exactly what's going to happen with future prices. Consumer prices, obviously, because the crude oil is needed for transporting goods. And it's always interesting to see, and also, of course, at the petrol pumps as well, you'll know why it's going up, because the futures is going up. Here we can see that after the correction during November, December, the market also, again, same pattern, doesn't matter what market is, you'll see prices coming back to 89%. If you'd have known, if you've been watching the weekly chart, the daily chart, that 89%, go down into the smaller time frames, you can then find your testing, and you can see that there, and also oversold here, there you've got demand in here as well, and I'll show you that because it's just off the screen. Oh no, we tested it, this one. This is well, it's the same thing. You've still got buying pressure test at this level as well. Then you get your crossover, and then you've got the market changing direction. Despite the fact that we've got some divergence as the market's moving higher, all you have to do is look at the parabolic. As long as it remains green, the prices are going to continue to the upside and close back above that 5-bar moving average as well. That gives you the short-term momentum of the market. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.